Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. So Pinnacle, West Capital Corporation, and Arizona Public Service Company are essentially telling us they're issuing new debt, and boy, is it a lot of it. Today we're peeling back the layers of this very straightforward filing. It's not a deep dive into explosive financial results or major strategic shifts, but rather a classic case of a utility company managing its massive capital needs. Think of it as a massive plumbing project for electricity, and they need to borrow a ton of money to pay for it. What's the core story here? Pinnacle West Capital Corporation, which is the parent company, and its main subsidiary, Arizona Public Service Company, are issuing a colossal amount of debt. We're talking about securing funds for two major note offering of notes that mature in 2034 to dollars advantageously. The first is a $250 billion in new debt in one go. These supplemental indentures are basically the detailed legal contracts that create these specific debt offerings. They lay out all the terms and conditions of the loan. So Exhibit 4.2 is for the much larger $700 million in 2035 notes. And Exhibit 4.2 is for the much larger $700 million in 25 to rate dollars mollen. All of a having $12 convolity dollars in return. And then you have Exhibit 4.3 and 4.4, which are the actual notes. These are the physical or digital pieces of paper, if you will, that represent the debt itself. They legally confirm that the company owes the money stated on the note to the person or institution holding it. It's like the customized IOU for each part of this massive borrowing. Exhibit 5.1 here is interesting. It's an official legal opinion from the company's own senior vice president and general counsel. This is standard practice for large debt issuances. It's basically a lawyer's stamp of approval confirming that all the legal paperwork for this debt issuance is in order and that the notes are legitimately created and binding obligations of the company. It's a crucial step to ensure investors that everything is above board from a legal standpoint. Now, you might be wondering why a company like Pinnacle West Capital Corporation, which is the parent, needs to borrow so much money. Utility companies are incredibly capital intensive. They need to constantly invest in upgrading and maintaining their infrastructure, power plants, transmission lines, distribution networks. This often requires massive upfront investment. They're not building a new app or selling a product. They're ensuring the lights stay on for millions of people, and that requires constant large-scale investment. This debt is likely funding those ongoing infrastructure projects, perhaps grid modernization, renewable energy integration, or simply replacing aging equipment. Pinnacle West's stock symbol is PNW, and it trades on the New York Stock Exchange. You can see that their registered address is in Phoenix, Arizona, which makes sense given they are Arizona Public Service Company. The CIK number being filed here, 0000007286, is for Arizona Public Service Company. This means that they are filing this report jointly with their parent company, Pinnacle West Capital Corporation, which has a different CIK number. This is typical when a subsidiary is issuing debt alongside or on behalf of the parent. You'll notice a lot of false flags here in the co-registrant data. This indicates that for Arizona Public Service Company specifically, it's not considered an emerging growth company, nor is it using any extended transition periods for financial reporting, for example. It's simply making its required filings as a well-established public utility. The date of this filing is August 15, 2025, marking the earliest event reported as August 15, 2025. This means all this activity, these debt agreements, were put in place right around this date. Now let's talk about the financial implications, because that's what really matters. While this filing doesn't contain detailed financial statements like a 10Q or 10K, the fact that they are issuing $950 million in debt tells us a lot. Utility companies often carry significant levels of debt because their businesses are stable and predictable. Revenue streams are generally reliable thanks to regulated pricing structures. This stability makes them attractive borrowers. The interest rates themselves, 5.70% and 5.90%, are not insignificant. In a rising interest rate environment, borrowing becomes more expensive. However, these rates can also be seen in the context of long-term infrastructure projects. They are locking in these costs for 10 and 30 years respectively. This is a strategic decision to fund long-term assets with long-term debt. From a Warren Buffett perspective, you'd look at this and ask a few things. First, is the company earning enough to comfortably cover its interest payments on this new debt, plus its existing obligations? Utilities typically have strong cash flows, so as long as their regulated rates allow them to earn a fair return, debt servicing shouldn't be an issue. Second, what is this money being used for? If it's for essential upgrades that will improve efficiency or meet future demand, and if regulators allow them to earn a return on these investments, then this debt is a sensible step. If it's just to cover operating losses or less productive ventures, that's a red flag. The sheer size of the 5.90% notes due 2055 signals a long-term commitment. Companies typically issue debt with maturities that align with the lifespan of the assets they are financing. So this $700 million is very likely tied to projects that will be providing revenue for decades to come, perhaps a new power plant or major transmission upgrades. Exhibit 99.1 refers to information related to Item 14 of their S3 registration statement. While we don't have that S3 here, Item 14 typically involves information about subsidiary information or other incorporated exhibits necessary for the registration of securities. It's supplemental detail that supports the overall securities offering. And finally, Exhibit 104 is the cover page interactive data file. This is essentially a machine-readable version of the filing's cover page, making it easier for computers and analysts to extract key information automatically. It's a nod to the increasing digitization of financial reporting. So what's the takeaway? Pinnacle West Capital and Arizona Public Service are financing their future, which for a utility means significant investment in infrastructure. They're borrowing a substantial amount of money, locking in long-term interest rates. It's a necessary part of their business model. The key things to watch are how their earnings growth and regulatory environment allow them to service this debt, and whether these investments lead to improved service and profitability in the long run. It's a sound, if expensive, strategy for a utility. Alright, that's our breakdown of this debt issuance filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.